Oil traders are focused now on the U.S. election, coming on Tuesday, as the likely winner in the United States presidential election would be the major catalyst, triggering the direction of crude oil prices this coming week. The decline in WTI and Brent crude oil futures came amid a record surge in new coronavirus cases in the U.S. and Europe. The U.S. reported 99,321 new COVID-19 cases on Friday, beating its previous record set only a day prior, according to data compiled by Johns Hopkins University. The top 5 records in daily cases have all been reported within the last 8 days, according to Hopkins data. Scientists warn that the U.S. is only at the beginning of the latest surge in cases and predict accelerated growth within the coming weeks. In the UK, British Prime Minister Boris Johnson announced a second national lockdown in England starting Thursday as coronavirus cases surged. People will be ordered to stay at home unless it's for essential purposes, including education, medical reasons, or to shop for groceries, Johnson said. Non-essential businesses will be forced to close and pubs, bars and restaurants must close, except for takeaway and delivery, he said. Germany and France last week declared fresh nationwide lockdowns in an effort to gain control of the coronavirus's worsening spread ahead of the holiday. Libya's National Oil Corporation has lifted force majeure on exports from the ports of Es Sider and Ras Lanaf, it said on Friday, adding that output would reach 800,000 barrels per day within 2 weeks and 1 million barrels in 4 weeks. Libyan oil output has recovered to about 500,000 barrels per day since the end of the blockade, far from the 1.6 million barrels it was producing before the country's civil war. Baker Hughes on Friday reported that the number of active U.S. rigs drilling for oil rose by 10 to 221 this week. That followed increases in each of the last 5 weeks. The total active U.S. rig count, meanwhile, was up 9 to 296. U.S. crude oil stockpiles rose more than expected the week ending October 23, according to the Energy Information Administration. U.S. crude production rose last week by 1.2 million barrels per day, the largest weekly gain on record, EIA data showed. Russian President Vladimir Putin indicated he may agree to extending OPEC Plus oil production reductions. This provided a little support, so we are confident that an OPEC Plus decision to make the move would be supportive for prices. Saudi Arabia is also in favor of maintaining the group's current output reduction of about 7.7 million barrels per day into next year in the face of lockdowns in Europe and rising Libyan oil output. OPEC Plus is scheduled to hold a policy meeting over November 30 and December 1. Before agreeing with the statement that crude oil is being controlled by the short sellers, keep in mind a warning issued by the Saudi energy minister in September. On September 17, the Saudi energy minister warned traders against betting heavily in the oil market, saying he will try to make the market jumpy and promised those who gamble on the oil price would be hurt like hell. Prince Abdulaziz bin Salman, OPEC's most influential minister, said, "Anyone who thinks they will get a word from me on what we will do next is absolutely living in a la-la land. I'm going to make sure whoever gambles on this market will be ouching like hell. To those who want to short the oil market, Prince Abdulaziz had the following warning. Make my day. Given these comments made over a month ago, I think OPEC Plus will step in and postpone the next round of production cut reductions, so be careful shorting at current price levels. OPEC turned the market around in April, and they can do it again.